All right, Bree, thanks so much. So let's take a deep dive into this topic with an expert on local real estate. He's George Theodore with Address Real Estate. So, George, it seems to me in the many years that I've been here, this is a place of mood swings when it comes to real estate. It can be red hot, but boy, it can cool off in a hurry. So where are we right now?
Well, I have to agree with you with respect to the perspective that we have on real estate. I'm a second-generation real estate entrepreneur, let's say, in South Florida. So we've been looking at it for the past 50 years in my family. I think that we did have a point of inflection and that it's cooled off a little bit. Certainly for condominium sales, people thought last year that it was going to be a disaster, but we're actually up year over year.
How do you explain that?
Well, I think that it depends on the volume and on the value. So the volume is up, but how much did the prices go up? And the prices didn't go up that much.
Yeah.
Also, at the high end and at the more affordable levels, there's been an increase in sales.
That's interesting.
So yes, there is. I think people were scared about the new laws that were coming in place for condominiums and the reporting requirements, and
it's cooled off a little bit.
Cooled off a little bit.
For sure, yeah. And you factor in the high assessments, and some of those assessments are high because of those new regulations.
That's true, but also because of deferred maintenance that some people didn't want to spend. So if you didn't spend the amount of money that you should have in the last 20 years, and you have to do it now with increased inflationary pressure on construction and repairs.
So what do you make of this report from the UBS Bank that says, man, we're teetering here on the brink of perhaps a collapse?
Okay, well, I had some time to look at the report, which was interesting. Of course, I have to give UBS a lot of weight, and Credit Suisse and Deutsche Bank, et cetera, for the kind of research that they do. But I wish they would pick up the phone and call the Realtors Association in Miami, because I think we have better stats, at least of what's going on down here.
You don't agree?
I don't agree with some of the thesis. The thesis is, and I just want to make sure that I'm right here, is that the risk is based on decoupling of local salaries from real estate prices. Well, that's Miami. We have 49% foreign buyers potentially, and we have a lot of people who aren't buying properties with mortgages.
Right, yeah.
So the application of this metric to Miami is a little bit difficult. I don't think it's applicable.
Yeah.
Plus, the report does say that they expect negativity in the next few quarters, but they don't expect a precipitous decline. So don't just read the headline, get into the report. And it also decreased our measurement by like 1.4%. We were riskier last year than we are this year.
But what about the people who are just everyday working people who do need a mortgage and who do need to qualify? It seems to me those folks are really having a tough time in this market.
I do think that prices have gone up. The expenses for construction have gone up. It's expensive to build a home, it's expensive to maintain a home, et cetera. There's no doubt about that. I do agree that salaries should go up in order to be more commensurate with the expenses that we have. But interest rates have gone down. We were at 7% for almost 5 years, and we went up high, even though during a time that Miami was booming in real estate, and now we're down to 6.3. I don't think people should realistically believe that interest rates for mortgage rates, should be down at 4%. That's unrealistic. I think that's going to help them, and I do think that there is a point of inflection that's occurred where prices have gone down in certain submarkets.
Yeah, I agree with you that people, especially condo buyers, tend to come here with a lot of cash in hand. They're not worried about a mortgage, they're just paying cash. They don't really care about the assessments. True?
That is true. The expensive, let's call them less affordable homes from $1 million to $5 million, the sales are up through the roof. And more affordable homes for $280,000 to $300,000 condos are showing good sales as well.
Where are those?
Where are those? We have to find them. You have to call your local broker in order for them to find them for you, I guess.
Yeah. Well, certainly it is a challenging market, I know, for a lot of people, and it's a tricky market, obviously. And we're talking about Miami-Dade. Any idea of how it is in Broward and how that might differ there as opposed to Miami-Dade?
I think that Broward is having also mixed numbers. I can tell you for sure in Palm Beach, there's a booming market, and all the stats are high. But the UBS report that we were talking about before didn't mention Broward. It mentioned Miami and more related to the city center and not up there. So I don't think if I lived in Broward, I would look at that report.
So bottom line, should prospective home buyer worry that the house they buy today will be worth a lot less tomorrow, or not?
Well, I think that you mostly buy a home that you're going to live in for longer than 1 or 2 years, and prices increase, but they don't increase like that and like that.
Like the stock market.
Oscillate just like the stock market on the way up and on the way down. I think we still have a lot of demand. I think we have limited real estate, believe it or not, because people want to be closer to the city center, like the UBS report discusses. And I think we have international interest. Again, 49% or somewhere around the 40s of foreign buyers buying in Miami.
Yeah.
So I don't think there's a decrease in demand. I don't think there's a decrease in population. And there's an increase in supply of listed homes in the condominium market and in the single-family home market.
Last question I have for you, and of course for years we've seen this, I know. Yeah, sometimes we say you're on Brickell at night, and you look at all these buildings, and a lot of them are only like halfway lit up, so a lot of those units are not occupied.
I agree.
What does that mean for the economy in South Florida as a whole when we have a lot of people who own here but who do not live here?
Right. I think that I could see risk in that scenario. You could think that that person doesn't care as much about their home than the person who lives here. But it's still money that they've spent, and I can't imagine somebody wanting to dump an investment at the drop of a hat. I think that we are a destination, just like Hawaii or some other places that are of interest to people, and people want to own there. Certainly from all our friends from South America, everybody wants to have a place in Miami. There's no doubt there. So I'm not concerned where people are living. For some people, it's their second or third home. And that's reflected in the stats.
Got it. We got the weather, we got the water, and we got you breaking it down for us, George.
Well, I'm trying. There's so many factors involved, and as you can see, the UBS report was based on so much information.
We won't panic because you told us not to. Thanks so much.
I don't think you need to.
All right. George Theodore, thank you so much for being with us.